We are so convinced that dreaming is a phenomenon far away from us that is almost like an imperceptible echo, but it is much closer than we can imagine. So close, you can hear it knocking at the front door. Buying a home is simpler than you think. This video will inform you about everything you need to know. The process is much smoother than you realize. Now, do me a favor. Make sure that the room is quiet and there's enough light to see. This video accompanies a free guide, and you want to make sure you're looking at it while watching this video. Now look at the scene. Here is a preview. Have it open while I read from the very start. If you don't have it with you already, download it free on assistancewithyourloans.net. Let's start. The ache for home lives in all of us. Maya Angelou. In Guide, you will find a visual flowchart. Know what to do and exactly when. Pictures highlighted to accompany you while you do the process. A checklist of all the documents you should have at hand to make the process smoother. Visual graphics step-by-step process timeline and ease of mind, which is truly priceless. Let's start on gliding you through the entire process. Chapter 1. Before even talking to a realtor. Decisions, decisions, decisions. If I wanted to buy a home in California, what should I do first, even before talking to a realtor? What should I have ready? How do I even talk to a bank? At this point, I'm going to pass over to the most qualified person I know, David. Can you explain about the different loans and answer my other questions? I like how in the guide there is an actual checklist.
The process of buying a home is very simple. Even before you start talking to a realtor, check out how much money you qualify to borrow from a lender. Your mortgage loan finances the actual purchase of your home, and you don't know how much you can afford until you know what you can afford. You can get an idea of how much you qualify for, so you can begin shopping for your new home. There's a quiz you can take on assistancewithyourloans.net. You may even have a home that you're eyeing already, which means step 1 starts with getting a pre-approval letter. Once you have a pre-approval letter from a lender with the amounts you qualified for, you are now ready to submit some offers to a seller. Depending on what loan you qualified for, you'll either be putting down as little as 3 to 20% down for the down payment of the house, or even no down payments for a home if you are a veteran. Generally, these are the loans across the board with mortgage banks. Take a second to remember the names of these loans, as I am going to get detailed about them. Remember to contact a lender even if you think your credit is bad or perfect. A good lender will help you get exactly where you need to be. Here is a list of things you should have on hand when speaking to a lender that will help the lender determine how much house you can afford. Now, if you're self-employed, wait for the second proportion of this list. If you're a wage earner, recent pay stubs, 2 years of W-2s, 2 years of 1040 taxes, and 2 months of bank statements will help the lender determine how much you qualify for. And if you're self-employed, 2 years of 1120s or 1065s, 3 months of business bank statements, and 2 months of personal bank statements.
You will be speaking to a licensed professional when speaking to a lender, whose job it is by law to work on the best scenario for you with your credit, income, and debts. Every scenario is different, and the lender will be working to get the best possible loans for you. Can you help or get help as a first-time home buyer?
Yes, possible assistance for first-time home buyers includes government programs, for instance. Many offer insurance to the lender. Because first-time home buyers are oftentimes considered by banks risky to lend money to, many programs offer the lender insurance to protect them from taking on that risk. The FHA loan. The loan is insured by the Federal Housing Administration. You can find out wonderful information on their website, the official FHA website. These loans allow for borrowers to qualify with as little as 3.5% down payments. This loan is best for buyers with low credit scores or those who can only afford a small down payment. and a credit score of 580 allows for 3.5 down payments. The VA loan, these loans are insured by the Department of Veterans Affairs. They come with no down payment for military personnel, veterans, and their families, and require a minimum of 580 credit score. The USDA loan is 100% backed up by the Department of Agriculture. For low-income borrowers in rural areas, these loans are limited to certain areas only to borrowers who meet certain income limits. Fannie Mae and Freddie Mac, two government-sponsored enterprises, insure qualifying loans, require as little as a 3% down payment, and allow for a higher debt-to-income ratio, something I'll get specific about later. But for now, just know borrowers need a credit score of at least 620, have good credit, and must pay for PMI if you are planning on paying less than 20% down on the home price.
Throughout the entire process, you will have your lenders and your real estate agent as your guides through this. From the day you talk to a lender about your situation to the day you get your keys to your new home, your lenders will be there for you, so you will know exactly what to expect when that beautiful day comes.
The lender will explain to you any costs involved to remain ready throughout the entire process. The role of a real estate agent to you will be explained later in this chapter.
Here is a checklist. Take in mind that by the end of reading this guide, everything will come easier for you. Title search to determine if there are any liens against the property. Title insurance to protect you and the lender if there are any lien claims. Transfer taxes. Appraisal for ensuring the home matches current market value and loan amount. Home inspection as required for loan approval. Attorney fees. Prepaid interest. Prepaid private mortgage insurance, PMI, for down payments of less than 20%. Cost of underwriting. Obtaining a credit report. Application and organization fees to cover paperwork and time in processing the loan, in exchange for a lower interest rate, discount, or mortgage points fees.
These are additional out-of-pocket expenses that cover a number of fees involved in getting you that money to buy your home. The mortgage loan process. Closing costs generally amount from 2 to 7% of the home. These expenses are aside from the sales price you negotiated with the seller. The timeline shown above will give you a sense of what to expect. This, however, is just a sense. To get you into a house generally takes from 30 to 45 days. In reality, the appraisal may take a little longer than expected and holds up the line. Some of the costs are upfronts before the property is officially sold, while others are paid at the time when you close on the sale and on the loan.
How can someone reduce their closing costs?
You can ask the seller to pay off some of your closing costs. In your negotiations with the seller, you could ask the seller to pay some of the costs on closing day in exchange for adding those costs into the total purchase price. Essentially, you'd pay less at closing, but you'll pay a little higher on the monthly. Or you can ask a lender to pay closing costs. Sometimes the lenders will agree to pay some of the closing costs in exchange for a higher interest rate on your mortgage. You'll pay more interest, but you won't have to pay as much upfront.
You have this guide as to help you get the most out of your lender and realtor. You have this guide so you have everything ready for when you're ready to purchase your brand new home. Did you know that the payment amount you put down has to be verified, as in your bank account, for 2 months for it to qualify as a down payment, and if not, can hold up the line? More on this later.
At this point, you are ready to talk to a real estate agent with your pre-approval letter in hand.
Now, it's really important to choose the right real estate agent, as he or she will be the one negotiating prices and could potentially save or lose you thousands of dollars. Do not go with a listing agent you find in an open house. I know that might sound like a good idea, but they're on the side of the seller first. If you want to choose the best to represent, you get a free real estate agent list and up to a 25-mile radius along with their contact information and ranking on Google by texting list and your city to this following number.
You will go out shopping with your real estate agent.
And your real estate agent is also the person who will be submitting an offer to the seller in form of an offer letter.
Offer letter, created by the real estate agent, will have in its signatures and a copy of the deposit check and pre-approval letter by the lender that's going to help you.
Your real estate agent will be giving this letter to the seller's listing agent and negotiations will begin. That can go back and forth a couple of times until some kind of agreement is had with the price and terms. Then the seller signs and you'll have yourself what's called a ratified contract. In this contract, you'll have a date on which both parties agreed to close by. Closing usually happens inside a title company, 30 to 45 days from the accepted offer. More on this later. You want to make sure you only make offers to homes you're absolutely serious about. Now, during the back and forth, a subject will come up called contingencies.
Contingencies gives you strength as a buyer. Contingencies are like only ifs. The seller is selling at a price. You love the house. The price is not an issue, but only if, for example, the house passes some inspections. Contingencies are set in place to help you as a buyer. They work as a safety net as for when you can ask for your deposit back. If all contingencies are met and signed off by you by their due dates, somewhere between 17 to 21 days after shaking hands, the deal continues and you get your house as expected. Talk to your real estate agent about contingencies before you start making offers. Sometimes it's wise to have some in play, and other times it may cost you losing the home you actually wanted. Be sure to only send offers you're 100% sure of to avoid losing time. If you are purchasing the home with a partner, make sure that you two are on the same page before mutually deciding on offering your money for a certain house.
Step 2.
As soon as you have a ratified contract after setting up dates and terms, both your realtor and your lender will head to work on their respective tasks. You will also probably have to establish what's called an escrow account, described in full detail in what's the process like in the beginning and what is my escrow account. Usually you will need to prepay the first year of property taxes and home insurance premiums at closing.
Costs are set by state, county, and municipal authorities. These legal requirements can vary greatly. Don't assume the closing costs in one location will be similar to those in a different community. In the next sections, we are going to see what these include.
To get an idea of how this might be in your specific location with your specific home and financial situation, take a simple assessment free provided by assistance with yourloans.net. Simply type in the best email to receive this information and press enter and receive answers you're looking for. Or email the word closing cost quiz to help@assistancewithyourloans.net.
The loan process is about to begin, and your loan originator is here to help you. He or she is a trained individual paid to help you through this process so you can get to move-in date quickly.
The seller also covers some closing costs, including sales tax, title transfer fees, attorney fees, certain closing fees, realtor commissions.
Step 3.
Wire initial deposit for your dream home to open an escrow account. Almost every mortgage loan comes with an escrow account. Think of it like a savings account.
What's the process like in the beginning, and what is my escrow account for?
Like mentioned previously, your mortgage loan finances the actual purchase of your home. However, as a homeowner, you must cover other costs in addition to the mortgage payment itself. Escrow accounts are used to make your life simpler and to protect you from sudden, unexpected, large expenses. Here's how it works. Almost every loan comes with an escrow account. Think of it like a savings account to make sure that you can cover these additional costs. What are those other costs? Property taxes as required at the state and federal level, and insurance, including homeowners insurance and or mortgage insurance. Your monthly payments will consist of payments to the principal of your loan and interest, plus most likely payments into your escrow accounts. The escrow proportion of your monthly payments is calculated to include the funds for taxes and insurance.
These tax and insurance payments will happen automatically from your escrow account. When the tax and insurance bills come due, your lender pays them on your behalf from the escrow account. You do not have to keep track of these items. All you do is make your monthly mortgage payment and everything is taken care of.
Your escrow account is essentially a savings account set up to cover taxes and insurance costs related to the home you're buying. There are 2 times you'll have to set up an escrow account. And most likely, if you are listening to this for the very first time that you have to make an account is when you're making an offer on the home. This will be a temporary account. Secondly, when you're closing on the loan. When closing on the loan, this is a more permanent account.
Make an offer for your home to be.
When you make an offer, you will deposit earnest money into an escrow account. Around 1 to 5% of the purchase price at this point. The deposit is non-refundable unless the sale doesn't go through because of the seller or because of contingencies, which again give you strength as a buyer, in which case you will get the earnest money, a refund. Something that I do want to say is that it's a very rare case in which it does not go through because of the seller. At this point, the lender will work on getting the money ready for you to purchase your home, and the real estate agent will be working on doing an inspection. Everything to get ready for closing day, which typically will be 30 to 45 days from this point. Prior to describing the next step of the process, here are a few facts about loans that can help you save money.
When you close on the loan, there will be an escrow account set up to collect the funds needed each year to pay for property taxes and home insurance as mentioned previously. You may not have an escrow account for the whole life of the loan, depending on the loan that you get to purchase your house. FHA and USDA loans require escrow for the life of the loan. Some loans give the home buyer the option of removing the escrow account once the mortgage loan balance has dropped below 80% of the home's market value. In that case, the monthly payment would be reduced as the funds would no longer be collected for taxes and insurance. However, it's the homeowner's responsibility for paying those expenses in full and on time. In this scenario, the homeowner would need to make sure funds were on hand, including the large annual property taxes.
Although most conventional loans not federally insured do not require an escrow account, the lender may be allowed to require one, as it is highly recommended to make managing expenses easier and protects you from having to cope with these annual bills. If you made a down payment of less than 20%, you may be required to take private mortgage insurance, PMI. This protects you from certain late fees, liens against your property, and even foreclosure if you miss these specific payments. If you do have an escrow account set up at closing, you will have to prepay the first year of property taxes plus 6 months worth of home insurance premiums. The account ensures that the bills are paid on time and that you have sufficient funds to do so. Your escrow accounts may also gather funds during the year from your monthly payments to cover this additional insurance. Whatever type of home loan you qualify for and choose, we are here to help you understand all the steps involved and to navigate you through this process. And now let's dive into what happens next.
Step 4.
Your real estate agent will send over a copy of the ratified contract to your lender, and your loan officer will order the appraisal. An appraisal is a type of inspection done by professionals to discover what the true value of the home is by dollar amount. More on this on Step 5. At this time, your real estate agent will order a general home inspection for anything that could be wrong with the house. The inspector might recommend other types of inspections as well. For example, he or she may recommend that you get the pool, roof, or chimney inspected. You will also get a termite and insect inspection at this time, and your real estate agent will do a visual inspection on the home and give you his or her report on the home.
In the business, this is called an avid report. There's examples of an avid report in the examples of documents page located towards the end of this guide. The seller normally provides a number of disclosures like description, any material defects, and past or present issues. During this first week, the home inspection will check the environment that you're going to be spending hours every single day. So there's no single detail too small to check or inspect. Here's a list of things you should consider getting: plumbing inspection, foundation inspection, roof inspection, gas inspection,
Mold inspection. Basically anything that could go wrong. Generally, you will have 7 to 10 days to inspect and submit requests for repairs to seller listing agent, and one last negotiation will take place to either fix anything found in the inspection or to give you as a buyer credit to fix the problem. Step 5. An appraisal is ordered by the lender. An appraiser comes and gives an evaluation of the value of the home based on 3 government-authorized methods used all across America. Step 6. The appraiser then reports the value, so the lender will know an exact number of what to lend you, and so you know exactly what to bring at closing day by the cent.
The lender receives an appraisal. By this time, your lender should receive an appraisal, and the lender will give you a to-do list that will have to get done usually by the 21st day from when you got the offer accepted by the seller. At this point, the lender may ask for additional documents for final loan approval, as requested by the person who gives the final approvals to fund a loan inside of a bank. In the industry, this position is called the underwriter. The underwriter requests the person that you're speaking to about your loan these documents. At that time, the seller should have fixed whatever agreed upon or have given you credit towards the home. Also, by this time on the lender's side, the lender will verify a few things on your side to get the money ready for you, like verifying that the down payment has been in the same account for 2 months, like described previously. Step 7. In California, most contingencies have to be released on day 17, and final loan contingencies have to be done by the 21st, as mentioned previously. This is done by delivering what's called a notice to perform, giving them 48 to 72 hours to either act on or release contingencies. When submitting offers to a home, be sure to be on the same page as any partner, if any. After this step, what's in that initial escrow account becomes non-refundable. The seller has trusted you with the purchase of the home. After this, the lender sends over its needed docs to the title company and everyone is ready to close. Step 8 and 9. At least 3 days before closing, you will receive documents called closing disclosures for you to know what to bring on the date of close. For you, it will mean how much money to bring, but on some occasions, the closing disclosures tell you how much money you'll be receiving at closing. This amount will be wired from the bank account that the lender previously verified. The quantity by now should be as expected from your previous conversations with your lender. It's important to talk to your current bank about their process for wiring large amounts of money to title companies. Sometimes For smaller banks, it takes 5 days to prepare a wire, and you want to make sure that you and your bank are on the same page when it comes to closing, so you get the keys to your new home on the expected day. Before the date of close, you as a buyer will have one final walkthrough of the house to check if it's not in any less of a condition as you have found it in.
On the date of the close, you, your agent, and the listing agent and a settlement agent from the title company meet. You will need valid forms of ID. You sign documents. You wire the money. Step 10. Once the loan is funded and grant deed recorded at the assessor's office, you get the keys. Step 11. Move in. Now you can begin with your brand new home.